Who doesn't like a good old video that dives into the possibility of another nation state getting involved with Bitcoin? Bitcoin is a global asset that could set nation states free from the grasp of the financial systems of old. So let's get out with the old and in with the new, because it's time for Chico Crypto. We all know about El Salvador. They were the first sovereign nation state to adopt Bitcoin in a legal way and on a large scale. In September, they passed the laws which would make Bitcoin a legal tender in their country, a global first. But that isn't all from the nation state. El Salvador this year is ramping up legislation to cover the issuing of Bitcoin bonds, which could see an initial release as early as a couple weeks to a month. Rumors are abound that the initial launch could be as soon as February. Now, how do these Bitcoin bonds function? Well, kind of like normal bonds. El Salvador will issue debt and investors will buy it up in exchange for an annual coupon, which is set at a percentage of what they invest. The difference is what El Salvador plans to do with the proceeds. Half of the proceeds go towards buying Bitcoin on the open market, while the other half will support the country's efforts to build a Bitcoin city at the base of Conchagua, an oceanside volcano. The plan for this is to allow El Salvador to sidestep and bypass the Wall Street banks and international institutions that have had a century-long chokehold on loans to developing economies, which is getting them in hot water with those traditional financial systems. As we can see, in July of last year, Moody's lowered El Salvador's credit rating. This included long-term foreign currency issuer and senior unsecured ratings to CAA1 from B3, which according to Moody's rating system, the country has a very high risk of default on its loans with this rating. From this CoinDesk article, we can see Moody's said the reason for the downgrade. Noting a deterioration of quality of policy making, the agency said the Bitcoin law and other measures reflected weakened governance in El Salvador, raising tensions with international partners, including the United States, and jeopardizing progress towards an agreement with the IMF, International Monetary Fund. The IMF, the big international financial institution who finances their members by working with developing countries to help them achieve macroeconomic stability and reduce poverty. El Salvador has been a member of the IMF since 1946, the same IMF who just last week released statements urging El Salvador to drop Bitcoin as a legal tender. Well, in response to all of this, the president of El Salvador, Nayib, tweeted, "Breaking El Salvador DGAF. El Salvador doesn't give a funk." So El Salvador isn't bowing down to the powers that be. But who could be the next country to follow in their steps? Who could be the next to go all in on Bitcoin? What about the number 3 most powerful country in this world? Who could that be? Well, I'm talking about Russia. So to begin on why this could be the case, some suspicious things have happened throughout the past couple of weeks. January 20th, it was announced across the news airwaves that Russia was proposing a ban on the use and mining of cryptocurrencies. From the Reuters article, we can see specifically it was Russia's central bank who was proposing the ban, and this included preventing financial institutions from carrying out any operations with cryptocurrencies, and developing mechanisms to block transactions aimed at buying or selling cryptocurrencies for fiat currencies. Gosh dang brutal, basically a shot through the crypto heart, especially with the mining ban included, as Russia is the 3rd largest country in terms of hash power, and this was reflected in the Bitcoin price. Remember, January 20th was the day the news was released, and Bitcoin was over $43,000. By the 24th of January, the price fell by 10 grand to just above 33K, a crash of over 23%. Russia's ban was a major factor of the crashing Bitcoin price. But the last time Bitcoin had an over 10K crash like this due to geopolitical news was back in September, when China did the same exact thing, supposedly banning transactions and mining. And dang, like Joe Dirt, don't the charts of the Bitcoin price during the bans look eerily similar? Well, that China ban wasn't what it seemed. This CNBC article sheds some light on what I mean, where experts estimate 20% of the hash power still comes from China. The article states, data from Chinese cybersecurity company Qihu 360 shows that underground crypto mining appears to be alive and well in China. In a November report, the research group estimated that there were an average of 109,000 active crypto mining IP addresses in China on a daily basis. Crypto mining has survived in China, in part because a lot of miners weren't sure whether Beijing was actually serious about the ban. China was still mining away and transactions were still flowing. They still are to this day. So of course Russia's ban wasn't what it seemed either. The week after the initial call for bans from the Russian Central Bank, Russia's finance ministry opposed the ban and believed regulation of cryptocurrency was the way forward. This came from the ministry's head of financial policy, Ivan Chebeskov. Specifically, Ivan said, "We need to regulate, not ban. Regulation is sufficient to protect our citizens." The Ministry of Finance has prepared a set of proposals and is waiting for the government to evaluate it. Banning crypto transactions and mining would mean undermining the industry's technological development. We need to let these technologies develop. Russia's central bank and Ministry of Finance, they don't see eye to eye apparently. Central bank wants a ban, the ministry wants to develop the technologies. So who has the final say? Well, neither of them. Mr. Putin does. Bloomberg reported January 27th in an article titled, "Putin backs crypto mining despite Bank of Russia's hard line." And the article states, President Vladimir Putin backs a Russian government proposal to tax and regulate mining of cryptocurrencies, rejecting the central bank's proposal to ban it completely, according to 3 people familiar with the matter. Russia did a flip-flop. They brought the fear and FUD crashing BTC to only say, nah, we like Bitcoin and crypto, we want to regulate it. So was someone looking to stack Satoshis on the cheap? Pick up Bitcoin for that near 30K bottom? If that certain someone was Russia, I wonder why. Well, everyone should know about the rising tensions between Russia and Ukraine. There are a supposed 100,000 Russian troops on the border of Ukraine, and there are fears that there could be a Russian invasion coming soon. Well, guess what? Yesterday the Senate was drawing up sanctions through a bill should this happen. From the article we can see it says, the legislation under negotiation among members of the Senate Foreign Relations Committee and others would target major Russian banks, hit Russian savings and pensions, and limit the market for Russia's sovereign debt, among other elements. Other elements? Well, Senator Bob Menendez is the one who drafted this bill. Let's hear what it's called and what sanctions are included from the man who created it himself.
The legislation that I drafted, which I call the mother of all sanctions bill, is one to deter Russia and says all of these things will happen. Putin personally sanctioned, Russia's sovereign debt sanctioned, sectoral elements of their economy, including the single most significant one, their energy sector, the removal from SWIFT, the International Financial Transaction Systems, and others, is there as a message, if you invade, here's all the consequences you're going to face.
These sanctions would target the trade of assets owned by Russian politicians and the trade of natural resources, which makes up the most of Russia's GDP. But the big one, cutting Russian banks out of the SWIFT network for international trades. Now, trades of natural resources and through the SWIFT network, majority use the US dollar for settlement. Russia can't use the global US dollar, but they could use Bitcoin. Is it possible they're looking at Bitcoin and crypto as an alternative? Is this the reason for the FUD to crash it and then the reversal last week so they could pick it up cheap? Well, back in 2019, when Russia was once again facing sanctions, this article came out. Russia plans to tackle U.S. sanctions with Bitcoin investment, says Kremlin economist. The article states, Russia is preparing an investment in Bitcoin to replace the US dollar as a reserve currency in a bid to tackle US sanctions, according to a Russian economist with close ties to the Kremlin. Vladislav Ginko, an economist at the Russian Presidential Academy of National Economy and Public Administration, a state-funded institution, said the government is taking steps to minimize the impact of U.S. sanctions that have hit the Russian ruble by replacing some of its U.S. dollar reserves with the world's most popular cryptocurrency. Is all Chico has to say. Cheers, viewers. I'll see you next time.